Next, we will have an executive interview, or as Charles likes to call it, a fireside chat, with Brett White. Brett is CEO of Zapper, an innovative payments company based in South Africa. The bulk of this conversation is focused on product innovation and how important it is to innovate continuously in the SME space. We will ask Brett to share his views on the role of the fintech community and what it is doing in pushing the limits of what the existing system will tolerate in order to deliver better results for merchants and for consumers. Over to you, Charles, for your fireside chat.
All right, welcome back, everyone. We have Brett White with us now, who's CEO of Zapper. And Brett, welcome to the virtual summit.
Hi, Charles. Thank you. Thanks for having me.
We're excited to have you. So I guess always a good way to start, just briefly, I think a lot of companies, a lot of our audience, I should say, have heard of Zapper. So why don't you just, for those who haven't or aren't familiar, give us the 1 minute elevator tour of Zapper.
Sure. Thank you. I'll try and keep it short and concise. So Zapper is a contactless payments and loyalty platform. Effectively, that's it in a nutshell. We are an omni-channel solution, so we work both online and in-store, for anything from a market vendor all the way through to a tier one retailer or an e-commerce vendor. We are integrated into multiple systems from, payment gateways to parking systems to billing systems to, you can have a static stand printed on a QR code or printed on a receipt in restaurants, point of sale systems, you name it. We've got quite a broad sort of spectrum of integrations. And, our value proposition is to try and, provide merchants a high value transaction, give them a little bit more insights into their consumers and how they spend and how they interact with the merchants, and then give the consumer a easy, frictionless and rewarding payments experience.
Okay, just to clarify, what does the consumer have to do to become a Zapper, a user of your solution?
So we've got two models. So the basic one, or the most common one, is a user just has to go to the App Store, whether they're on an iPhone, an Android phone, or on a Huawei device. They can go to the relevant app stores, download the app, register, which is very straightforward. It's just name, mobile number, and email address, and load a card, load a payment instrument, and then they can start to transact against Zapper merchants.
Okay. Pretty straightforward, like most.
Pretty straightforward. Yeah.
Okay, so you work with merchants across both online only as well as retailers, physical retailers, etc. Could you just give us a sort of state of play with how your customers are doing in the sort of? I realize we're still in the thick of it with COVID, but light at the end of the tunnel, but still happening. So kind of give us the state of play there.
Yeah, look. The state of play is it's recovering nicely. The early, deepest, darkest stages of not load shedding. I mean, that's also a problem, but
that's another issue
of lockdown. In levels 5 and 4. I mean, those are pretty dark days. Excuse the pun. A lot of our merchant base is small sort of SME type merchants. They've got coffee shops and restaurants, and those guys were impacted hard. We've got other merchants on our system that are, online. So we still had transactions coming through, and it was never, we didn't drop to any catastrophic levels, but, we lost quite a lot of volume as a result of those merchants being shut down during that period. And obviously, the subsequent lockdown levels that we've had over the last couple of months where, alcohol bans, et cetera, have kicked in and restaurants had curfews, that obviously had a very real impact on our transaction volumes. We've also got a lot of corporates that offer Zapper as a transaction method in their canteens, et cetera, where they give their staff lunch vouchering through our platform. Those volumes fell off as well because, a lot of companies aren't working in their offices. But what we're seeing is, we're almost at the volumes that we were at pre-lockdown. It's starting to climb rapidly week on week, which is really good news.
So you mentioned something just a second ago that is interesting, and we don't want to dwell on this too much, but I'm curious, the office canteen and that sort of thing. I get the impression that's not a major piece of your business, but it's a piece of your business. What do you think is going to happen with that long term? Do you feel that the office, are we over with the marching into a multi-story office building to sit at long banks of tables? Is that done with, or is that just a temporary pause? And how do you think about that?
Yeah, look, I think there's two schools of thought around that.
Yeah.
I've been listening to a lot of podcasts that talk about the same topic.
Mm-hmm.
Is it the fully remote workforce, or people is this just like a sort of temporary measure?
Mm-hmm.
I'm kind of in between. I think that the model moving forward will be more of a hybrid approach to whether you work in the office or whether you work at home. And I think that there'll be a lot of businesses that kind of adopt some days of the week they'll want you in the office, but during core hours, for example.
Mm-hmm.
The beauty of the product that I mentioned is that we basically provide sort of call it corporate customers the ability to give their staff vouchering, which can be used in an internal canteen. So in other words, they cap them with a certain allowance on a daily basis for them to be able to transact and get their meals during the day. But that can also be ring fenced to other merchants in and around sort of where they live. So in other words, they can still offer their staff the ability to get the benefit of discounts on lunch, etc., even if they are working at home. Through our platform.
Okay. That makes sense.
We're hoping that there will be this hybrid approach. Yeah, exactly. Exactly.
Okay. All right. So one of the things that came out of COVID is I think it forced innovation. I mean, you always want to be innovating, good and bad times, right? But COVID certainly forced a lot of innovation, and which sort of leads to the question. And a company like yours, I know your company prides itself on innovation. Any company in your space has to be innovative. So talk about, if you could think of one or two examples of things Zapper has done, either recently or over the years, that kind of illustrates how you innovate.
Sure. Well, look, excuse me. One of the things that we did when the first sort of levels of lockdown kicked in, and we had merchants that were very badly affected by the fact that they couldn't operate. We set about trying to innovate as quickly as we could to introduce the ability for consumers to either donate to their favorite restaurants or merchants in the area, or buy vouchers that they could then utilize at a later stage at that merchant, but allowing the merchant to continue to get a bit of cash flow during that period. We launched a campaign called Save Your Fave, but basically we already had the ability to push vouchers to consumers, and we had the ability for them to earn loyalty automatically as part of their transaction process. What we didn't have was the ability for consumers to donate to those merchants directly, and by just finding them in the app and tapping donate, entering an amount that they wanted to pay, and then pay, and then the ability to request the purchase of a voucher, enter the amount that they wanted to purchase, and then a voucher would be issued to them. So that model worked really well, and I think that little bit of innovation at least helped a lot of merchants through that tough time. So that was one thing that we did, but that was obviously for a very specific phase, right? What we've done, outside of that is, trying to, I think one example that I think really jumps to mind is we released an article on it fairly recently, but it's basically an innovation that we introduced to mitigate the need for a QR code to be digitally rendered in real time. So in QR payments, you get predominantly static QR codes, which are sort of pre-populated with merchant credentials. All the consumer does is they scan it, they enter the amount that the merchant wants to get paid, and then they pay. So there's a consumer interaction there where the consumer has to enter the amount. Dynamic QR codes are rendered in real time, and they have the merchant particulars inside plus the amount that the consumer needs to spend. So that's pre-populated from a consumer perspective. What we introduced was a way for a merchant to have a static code that behaves in the way that a dynamic code would. So in other words, at a point of sale where it's expensive to roll out a consumer-facing screen or update software on a pin entry device, or change the user flow of printing a receipt with a QR code on before payment, which is not the typical flow within a retail setting. We were faced with the problem of how do we overcome the expense of rolling out digital displays across an entire retailer's network versus having a static code that then allows the consumer, when they scan it, to get the dynamically populated amount. And that was an innovation that we introduced where the point of sale is integrated with the system. At the point of ringing up a basket and they press subtotal or total, it doesn't then push a QR code to a screen or to a printer. It pushes it to a cloud. Zapper scans it, and it pulls that amount by virtue of the QR code that's allocated to that POS. That's a patented solution that Zapper introduced, and I think that's like an innovation that I can speak to, that I think works really well.
So in a way, it behaved dynamically, but it was all sort of behind the scenes or in the cloud behind. But they had one simple. In most cases, it was a printed QR code that the reader would picture at the point of sale. Okay, yeah. So okay, that's really cool. Yeah. So how did that? What was the business outcome for you for that? Did that create more opportunities for shops to adopt your service? How did Zapper? How did that? What was the outcome for Zapper for that?
Okay, so I can speak to the first use case of that, where we had it was a big South African retailer who wanted access to be able to offer Zapper as a payment method across all their stores, but there was the capex issue of investing in customer-facing screens if they wanted to dynamically represent or present a QR code on every basket that gets rung up, or print a QR code on a receipt. But in a retail checkout, that receipt is printed after the payment, not before the payment. So it's a bit of an awkward process flow. In a restaurant setting where the receipt is printed before you pay, it's perfect. It makes a lot of sense to have the QR code on the bottom of the bill. But so the reality was we were at a stalemate. We couldn't move forward on the project because the retailer didn't have the interest in that sort of capital outlay to put screens in, and Zapper was not in a position to foot that bill either. To pay the bill because making that money back would I don't think it was possible. So we had to come up with a solution that was feasible in that environment, and this solution really unlocked that for us. I think based on the initial estimates around what the solution would have cost and what we actually rolled out at, I think we came out at something like 15% of the original estimation of what the cost of integration and rollout would have been across that entire merchant footprint. So that's every lane of every store nationwide, which was a lot of lanes. So we slashed the prices massively just through that one innovation.
Okay, that's great. So let's move a little bigger picture now. A couple things. One thing that is sort of interesting from the period we've been through is this notion that, and it maybe touches on what you were just talking about a little bit, this notion of accelerated adoption of technology as a result of what we've just been through. Have you seen this with your own eyes and with your own customer base? And how would you describe the acceleration that's happened among small business in terms of adopting technologies across the spectrum? But certainly you can speak to the payments side of that. Have we experienced that in South Africa and in the markets you operated in?
Yes, I think so. I think, what COVID has done in multiple ways is kind of pushed a lot of technologies forward by at least a few years. You think of, who was Zoom at the beginning of 2020? We're on it now, but, was it the product that it is today? And Teams, Microsoft Teams is another one. If we're not talking about payments, those have just leapt forward, right? And in the payment space, a lot of merchants have had to pivot towards a sort of online model. Hopefully, some of them have gone to click and collect or delivery services. They've had to introduce a new way of doing business in order to survive and, cater to the restrictions and to, consumer behavior as a result of the restrictions. So, I think there's been a lot of innovation around that. I mean, obviously, new technologies and access to, cheaper devices, access to data, all of those things play into consumer adoption of new technologies. So, I think the world that we're living in and everything that's happened over the last 18 months is certainly, how long has it been? 12 months. Has really, it feels like 3 years, but, it's definitely pushed things along.
Okay, that's fair. So looking forward, sort of as you look down the road and what what Zapper has to prepare itself for in terms of technologies coming online in the future, what do you look at as the trends in the future that you have to take seriously and sort of innovate around? And these could be across the spectrum in terms of consumer technologies, networks, shift to blockchain or whatever it is. What things do you think, okay, this is how the world's going to change, and here's how we have to adapt to it?
There's a lot, but I think
Mm-hmm.
that technologies in general. I think we're moving. The world has shifted mostly to mobile devices, but obviously that's even taking on new forms in terms of people being able to facilitate payments off of their watches.
Mm-hmm.
I think technologies such as facial recognition and biometrics are going to leapfrog having a device that still needs to be connected to a system. It needs to be online, plus it needs to have battery. That's another issue. Your device needs to be charged, etc. I think long term we're going to be in a space where a lot of those sort of biometrics type technologies are going to take over in terms of how people transact and purchase things. In the interim, however, I mean, for the foreseeable future, the next 5 years, I would say, we're in a space of mobile payments being a predominant way of people moving forward. That's where there's going to be a lot of innovation. And I think there's going to be a lot of innovation around, payment instruments themselves in terms of the rails over which people make payments. I think, things like blockchain, open banking, instant EFT, all those types of solutions are being introduced because, people are challenging the status quo in terms of the incumbent or the standard rails in which people process transactions right now.
Mm-hmm.
And they're trying to introduce ways that money can move quicker. It can be easier on the consumer, easier on the merchant, and lower cost. Mm-hmm. So I think there's going to be a lot of innovation around that space. And then really where, fintechs are going to participate in that space moving forward is to try and add a value proposition in that space. What is it that this differentiates your solution from another, outside of the standard payment that basically any entity can facilitate.
Okay. So in terms of the competitive field looking ahead, how do you see, I mean, the technology has probably influenced this in a lot of ways, but, there's the banks, there's the the neobanks and all the new fintechs coming on board. Is that how does that evolve in terms of, who's winning, who's losing? Is there going to be a massive disruption in terms of who the players are, or is that in the near term, or is that more of a longer term process?
Look, I think that the banks are going to be necessary, and the banks are always or they are trying to keep up. And if they, I think the fintechs are absolutely necessary and constantly pushing the limits of what the systems allow, right? Mm-hmm. So there's regulation and there's limitation in terms of what the systems allow for, and the fintechs are always going to push those limits to do exactly those things that are listed earlier in terms of introducing more consumer friendly payment flows, introducing more value to the merchant, making it quicker, easier, frictionless, lower cost. All those things are going to constantly be pushed, I think. And the reality is a lot of the bigger entities move slower, so they're going to struggle in that space. So I think that the fintechs are always going to be necessary and required in that space. And I think that there will obviously be a lot of opportunity for those fintechs to supplement and work with those bigger entities to provide them the capability that they so desire. So I think there will always be a symbiotic sort of relationship there. And, even what we've seen over the last couple of months around some of the schemes starting to introduce the ability to, or at least flirting with the idea of supporting crypto in some way or shape or form. Some of the banks are talking about it as well, and I think a couple of months ago that would have been very frowned upon. I don't think that would have been well supported. I think, what Elon Musk has done recently with buying a whole lot of Bitcoin has certainly lit a fire under that sort of topic. But I think, to answer your question, I think that there's definitely space for all players or all parties to play in the market. But it's, the fintechs are always going to be those guys that are pushing the limitations of what the existing systems allow for, which, so it's an uphill climb. It's always very, very difficult to kind of go against the flow of, what are standard sort of regulatory frameworks that you need to kind of play within. But, through the ability to try and mix and match certain protocols and the way things are done to come up with new innovative ways of doing things, I think that's going to continue to be valuable. Absolutely.
Okay. Well, let's end on this note. What's next for Zapper? I mean, one thing I've been seeing is sort of a conversation around, is it geographic expansion versus sort of expanding your footprint or your stack And I don't know that those necessarily mutually exclusive, but I think those are two paths. It's a matter of emphasis, I guess. And so talk about where, just for a couple of minutes, what you looking, what's next for you, at least that you can talk about. That's always the caveat, right?
Yeah, what I could talk about. Look, I could talk about it at a high level. I think you've hit the nail on the head, and I don't think that they're mutually exclusive. To answer your question, Zapper was traditionally a B2C and B2B offering. In other words, we were providing a product directly to consumers, and we were providing a product directly to merchants. So we were giving consumers an easy way to make payments and earn rewards and get discounts, etc. And we were giving merchants the ability to accept payments quickly and easily in a omni-channel kind of way, and giving them insights and a way to incentivize consumer spend. So that was our traditional model. What we've done over the last years is built out our platform, which is our B2B2C sort of platform as a service offering, which is basically allowing third-party networks to integrate with Zapper so that they can create their own QR acquiring network. And we've given third-party apps the ability to integrate Zapper services so that they can create a third-party issuing network. Now that model is working really well for us, and we're getting a lot of growth, especially with South Africa's kind of push towards being a more interoperable network, trying to reduce the number of QR codes that are in the market, giving the consumer the choice as to which app they want to use to pay, that model is working really well, and we want to replicate that, in other markets as well. So we kind of want to expand that footprint and grow. I think, the South African market is great, and we want to be successful here, but we definitely have aspirations of expanding that footprint.
Great. Okay. Well, we're out of time. Unfortunately, we'll have to end it there. Brett, thank you very much for joining us today. We appreciate it, and stay safe.
Thank you very much for having me, and you
Great.
stay safe too.
All right,
Cheers.
bye-bye. Thanks.